Yo, welcome back. Welcome back. You already know, man. It is Wealthy Sibling. I'm your host, Marcel, known as the Wealth Mentor, around the world, founder and CEO of Griffin Speaks. And I'm here to do what? Change our family money story because we are the ones who become successful, will be successful, and are the wealthy sibling, the wealthy relatives of our family, right? And what is that journey like for us as entrepreneurs, for us as the career driven, for us as the ones who just started that journey, man? But we all on the same mission to do what? Change our family money story. This is episode 34. Oh man. And I can't wait to have these conversations with you. You already know the topics that we love. You already know who we are first and foremost. If you watch this, you wanted to become one of my 1 million wealthy mentees, which I hope to impact and create a journey for you, right? And what I want to talk about today, man, is the market, always the market. We are investors first, and then we go on wealthy journeys afterwards. And what do I mean when I say wealthy journeys? Then we strive out and branch out into other ways that we create and make wealth. But we are investors first. So, man, it's a few things, and it's a few things I want to talk about. NVIDIA's earnings, the impact of the upcoming market because it is a holiday. The market was not open. So I had to wait all the way until 7 p.m. Central Time just to see which directions the stocks that I'm currently in we will talk about, and just the overall market, the sentiment of the market. And then I want to talk about Roth. I want to talk about Roth IRAs, traditional Roths, and high yield savings accounts. One of my mentees, while they was taking a financial literacy course, not mine, a different one, but again, as always. But they asked about like what was the difference. He was a very insightful young man, and it was actually a breath of fresh air because I don't catch too many, even though I'm trying to make an impact of all young men, especially young black boys, young men of colors that are that in depth at that early of an age, right? Because he's probably like 16, anywhere from between 16 to 18. He has these questions because he's thriving to. I can tell he's thriving to become a sustainable and high level entrepreneur, and it's a blessing to see. Uh, but that's one thing, right? And if he has that question as a young man in this generation, Gen Z, I bet a lot of y'all have that question right now. And then the other thing, um, could you make that in a year, right? Like, could you fully fund your Roth IRA in a year? Yes. From trading, yes. And the reason why I say yes, and I'm not just spitting this, the reason why I say yes is because I had posted this recently, so you can go fact check this version on my, I believe it's on all my public socials, but I know it's on my Instagram for sure, and I know it's on the Facebook page, which is Marcel Griffin Speaks. Um, to where I showed my overall profit for the past time of investing. I want to say out of this brokerage, probably at least the past 2 years for sure. But the one of the possible stipulations, I won't say this for all Roths, but my Roth is fully funded at $7,500. Right, that's when it's fully funded. To where this is the max amount of contributions you can put into this Roth, and the growth beyond that is whatever else is tax free, and it can grow up to possibly like $1 million worth of assets. Right, this is the basis of it. And I made that over the time that I've been investing, primarily been trading, which is why I say yes, you can fully. It's possible. It is 100% possible for you to fully fund your Roth um, trading within the next 1 to 2 years. Because I would say if you coming out the gate trading, unless you quote unquote getting lucky, then yeah, you could do it in the first year, but you got to practice. Like, I don't know too many people who come out the gate. And a lot of people think this like, man, why aren't you more successful than, or farther along than you were in all the things that you've done. It's like, if I'm going to be honest with you, it's like we're going to be honest now. Um, I've had successes, right? But there's always ups and downs, right? Nothing's perfect. And I think a lot of people, when they come into the financial game, they get bombarded with these overnight success stories, and they think that this is a one-trick pony, and that, oh, if I get this right tomorrow, it'll happen. And I'm like, no, that's not how the investing game works. Uh, Anything can happen tomorrow. The Trump could say anything tomorrow, and the market goes the entire other direction, right? Like truly. So it could be like that. But I'll get sidetracked. And then when I talk about Gen Z wanting to know so much about these things financially, one of the things that I was surprised by the article that I seen today about a boardroom. Shout out to the boardroom. I love their page as an entrepreneur. Can Gen Z save AMC? Sorry, AMC. Let me see, because I meant to look this up like right before we started the show, but let's do it now. Because my brother loves AMC. Like, he's an AMC fanatic. Uh, and I don't doubt his hype, but it's I won't say anything's possible when you've seen what GameStop has done. I will not say nothing is possible when you've seen what GameStop has done, truly. But let's go back. So AMC, prior to when the pandemic, impacted them. Well, let's see if there was any higher. If they go any higher. Okay, so the highest AMC was June 2021, and I'm looking at my Robinhood brokerage right now. June 2021 was 360, and it's at $1. $360 was his all-time high in June 2021, and right now, today, this year, is at $1.54. But I digress. We will get to that. All right. So, as always, man, it's great to see y'all. And we're gonna talk about a few things. Market volatility is always, trading strategies, long-term wealth building through Roth IRAs, and whether Gen Z can save the movie culture. All right. So, trading the market versus trusting the market. I need you to hear me again. Trading the market versus trusting the market. All right. So the market has entered another critical earnings cycle where investors are speculating whether May and going into June will actually have more and better company performances. Stocks that are tied to AI. AI is the talk of the town right now. Probably be the talk of the town all the way through the summer. Consumer spending, and that's related to because of all the gas prices, where you'll hear the cuts for consumer spending when it comes to the market. And retail continue to experience heavy volatility, but the crazy thing is retail spenders are really, really hyped over this $300 AP. And even to this day, I was like, well, all those people, 9 times out of 10, those people are part of the middle class, or common workers. 9 times out of 10, majority, if not all of those people, have forms of regular jobs, but yet they're running to these stores to get a $300 watch, and they're complaining about gas prices. But they ain't trying to be wealthy. That's how I look at that. I'm just going. That's just my truth. But also, we're experiencing heavy volatility because of Wall Street's pricing companies based on future growth projections, and I have my speculations on these companies. Probably one of the few things that I see how poly markets, or prediction markets as they call it, would have a spike in bettors is these IPOs. I can see a lot of bettors who call themselves want to get into the financial game oh yeah, I'm gonna bet money on the IPO and whatever SpaceX will be. Man, I don't think it's going to really evaluate at $1 trillion. I could just see it. I could just see it. But that doesn't mean Wall Street will be wrong. So, but they're doing future growth projections versus current earnings. That creates an environment where good earnings may still cause the stock to drop if expectations were unrealistically high, right? I don't know what unrealistically is in the world that we live today. But at the same time, a lot of us as traders are watching like the inflation data, Federal Reserve commentary. I definitely look to see what the new Fed chair, how he's talking, speaking, um, what is his thought process with the worldly structures, right? So like what is the world spinning? How are they um managing their economies and then our economy as Americans, right? So and it's spending trends, right? Consumer trends. So companies like NVIDIA and Home and D are now acting as indicators for larger economic themes. This is 100% true. AI optimism and consumer strength. The market right now is extremely sentiment driven. Sentiment driven is another word for bro headline driven. Trump could say something tomorrow that is not appeasing to the direction of my trade, and I'm gonna be blue. He could say, he could also say something that's really positive. He could say, yo, the war's over. 2-3 more months, gas prices gonna go down. We can get back to kicking it. On one hand, the stock market is gonna go to the moon. Some of my calls gonna go to the moon. Awesome. On the other hand, we could be in worldly conflicts for longer than you think. And depending upon where you lay your money and what sector, it's going to be impacted, right? So, my current positions. All right. So, still on my Home Depot call. I do believe that Home Depot can get to 360 very confidently, at least by the end of this year. And the crazy thing is, yes, my call for Home Depot is 390, literally. Right. So that's one play. And if you have never invested, never been a trader, let me explain to you why I'm talking about 360. Okay. Uh, let me look at this chart really quickly. So I'm in profit right now, percentage wise. And this is overnight movement, but I'm 20% in profit. And um, Home Depot's only at 315. It's not even at 390. And it is barely towards the end of May. If you look at the Home Depot chart, and I'm going to see if I can pull this up for you guys. Let me do this in Legend. Shout out to Robinhood and Legend. I really do like Legend. Never traded on Legend, but I do like the setup in regards for when I'm charting. So let's do this. Okay. So as of right now, make sure I show you. Legend. Overnight pricing gives me an insight into what possibly tomorrow will bring. But I never use it as concrete until the bell rings. 100%. I will glance at it because the market wasn't open today, even though it's Monday. It was a holiday, so the market's closed. So, um, I can't consider it like, oh yeah, the stock's continuing to trend up. But what I will say is that I'm already in profit from the call. So this is why like I love options, long swings, and I love leaps. Absolutely love leaps. So um as of right now, Home Depot's at 315. I can already see it getting back to 330 by mid-June. And again, my call is already positive. So it for in regards to me making money, not my exit plan, because my exit is 390. I believe it can, and then let me go back to this. So where's 390? 395 was February of this year. It's May. If this stock gets to 350, which it was in April before it took this major drop, April 21st to be exact. I don't know if that's a Monday or Friday, but if it gets to 350 before May, before July, I can see the projection for my 385, 390 exit by like October, which is my personal projection. Now, does not mean that I need to necessarily wait, not for this particular call. So, like, for me, so let's say it gets to 390 by October. I love the simulator. 390 by October, I'm up 250%. Not mad. It gets there before, that's a completely different story. Especially by July, that's a completely different story. But at 200%, I'm not mad at that. In the same year where most people are trying to coddle and I'm not mad at that. I'm not mad at that. Like, yeah, it's gonna be a good one. It's gonna be a good one. I'm really confident that there's gonna be a good one. NVIDIA. Where is NVIDIA? Okay, so NVIDIA is taking a climb from overnight Friday. It is climbing back up from its low of 214. Right now it's at 217. In order for me to have a confirmation by morning bell or by the end of next day, it needs to really change directions, because if you're looking at it from this daily, and let me know. Oh, you guys can't even see that. I apologize. I've been talking all this time, and I don't think y'all can see that. So let me go back and just let me do this for you real quick. I really do apologize for that, y'all. So yeah, it's at 215. By April, it was at 250. If it gets to 250 by June, I definitely see the projection of us continuing uptrend and getting to 290. My exit, to be honest, would be anywhere. Well, I'm going to be honest. So my exit is the 290 because it was 290 in February. I truly, truly believe they can get to 400. But I may leave at 380. Yeah, that would be my my positive green light for me going. Like, I don't need all the money on the table. If it hits the wrong run, if it hits a home run, it goes up to 400 by the time the end of my call. That's great, but the higher it goes, the earlier, the better your call will be. As far as when I'm talking options, the crazy thing is I didn't even realize that the The Asian market was open for futures today. By the time I woke up, bro, I was blue, bro. I was blue. Um, but yeah, so it's at 217. I don't know if this is again, like it's trending. It's down. When by the time I look at this overnight, it was at 217.50. Right now, literally, while we're looking at it, while this is airing, it's at 216.95. Right. That's why I never trust um when I look at it overnight, but I like to get a glimpse because again, the market wasn't open today on Monday, so now we're just getting into like possibilities. The daily, this is something I did want to show you in case you. Let me see if you guys should be able to. Yeah, maybe you can get the full view. Okay, so this is right. This isn't even today. Okay, let me see. What does daily look like? Daily, what is this? 3 months? That probably was 3 months. Yeah, that's what you were looking at. Okay, so this went out to about 3 months, and the time frame. This is the daily, right? So one full day of trading. That means what direction was the stock going in this day? So on May 14th, about 2 weeks ago, it was at 235. The high was about 236. Closed at 230. The low, so high means what's the highest the stock reached for the day. Low means what's the lowest the stock reached for the day prior to the opening. That means, hey, what was the price when the bell rang at 8:30 my time? And it might be 9:30 your time, depending on what time zone you in. But for that day, got up to 36, dropped down to 29, 229, closed at 235. Close is very, very important. Now, it closed at 235, opened at 229. That seems like a good day. That's a $5-6 move in a day. If you were day trading, that's a good move. That's a good trade all day. Anywhere from 300 to maybe like $700. Yeah, that's a good trade. Now, that's for a day trader. For a swing trader, your main move was back in May 05, right? What do I mean when I say May 05? May 05 from basically May 15th, 10 days. If it's trading these out Monday through Friday, 2 weeks. May 05 was at 194, or the low was at 186, right? Swung all the way up to 235, 2 weeks. Heavy. If you hear me, that's an amazing move. Now, what's happening, what you're looking at is each day it went up. May 8th, May 11th, right? Every like open trading day. So Monday through Friday. Went up $2-3, 216, 215, 220. I had a great week. We get to the 14th. We get to the 15th. Now you see a different direction. Now you see, it's opening at 229, getting all the way to 224. Same thing repeats the next day or the next trading day, which is May 18th. Opens back up at 229. Low is 218. Red candle. Tries to regroup. The reason that May 19th is a green candle is because it closed above its low. It closed above the previous candle's low. So it's green. Because and its high was above the previous candle's close. So it reached, yeah. So it it broke upward above the previous day's close and lowest point of the trading candle. So that's why it's green. But this isn't a solid direction because it hasn't broken above May 15th high. So this isn't a new direction. This is just a better trading day. This isn't confirmation for me. And this is a daily. So when I look at this, I would say this trading week, the candle's dropping. The direction is still downward. And this is from NVIDIA. Now, when I map this out, I say, okay, last trading day got to 215. If it continues this direction, I see 205, really 200. I wouldn't want that, but I have a protected put. So we're really going to see what tomorrow is going to do. And that's going to be an interesting day for me. Because you had I'll have to see where the floor is for that. I'll have to see where the floor is for that, if I'm being honest. But we can get back to it. Man, that's how you know I'll talk about this all day. I'll talk about this all day. I really will. But the things that I want you to look into for every transition. AI spending boom, consumer spending weakness, interest rates. I'm not doing any luxury, and I'm saying this publicly. I'm not doing any luxury spending for the next 2 years for sure. And I need you to understand this. If you're getting into this game, it is pivotal for you to get into this game now because I have no idea what the world's workforce structure will look like in the next 3 years. And it's probably the first time I said it in a public forum. I can't see the workforce being the same in the next 3 years. And that is really concerning for even ourselves as young millennials. The Gen Zers, they're adjusting because they came into a different world. But even for them, right, the ones who are currently coming out of college, the ones who've been out of college for a few years. So if you like 25, 23, 22, like, yeah, there's some adjustments going on. And I think that we as a society have to prepare. But trading is timing. Investing is conviction. The market moves off a lot of expectations. And I'm always going to be trading over gambling and scratching these lot-off tickets. Always. Sometimes great companies still become bad trades, especially if you stick to your rules. Like I was in Microsoft, and Microsoft still did bro. I will never forget it. It dipped below. I was in a Microsoft call for like 390 last month. It broke my rule of 330. It broke my 30% rule. Really, it was 20% rule because I'm really tight on like my money and my conviction, and I think I just moved to a different trade, and I seen a longer projection, so I put my money in a different trade, probably the Home Depot. But again, that's an example of a great company because where is Microsoft right now? Microsoft is at and I ain't gonna hold you. I really want to get in this Exxon put. I really want to get in this long Exxon put, bro. I really, really do. And if my I don't know, if my NVIDIA put plays out how I want to, I probably will get into this Exxon put, bro. I really would, bro. Microsoft is at 420, and I remember when Microsoft was at 355. I thought it was gonna go lower. I really did. I thought it was gonna hit my I thought it was gonna hit that sweet butter price, bro. I really did. I really did. And I only hit the swing price, but each his own, man. Another one though that I'm looking at is this ultra. Let me see what this ultra at real quick before we transition. That ultra at what was it at? See, 275, bro. 475. The ultra is at 522. Yo, hey man, when I tell you, bro, I made 700 off of ultra call, bro. That's that volatility though. Like ultra is heavy on volatility, bro. If you trade it, I ain't even gonna hold you. But you get that direction right, yeah, you got some money. You got some money, shorty. You got some money. Um. Oh, oh man. All right. So let's talk about it. Um. Raw versus high yield savings accounts. Could you could trading fund your retirement account? Yes. What does okay? I stopped sharing. So my let me see if it says it on here. So yeah, it says my max, right? It says for 2026, you can contribute up to $707,500 across all your IRAs, or yeah, IRAs, right? So your Roth IRAs. And it says you can only contribute to the Roth if you modify the adjusted gross income. Right. Filing standards. Woo. Always read it to your filing standards, but yes, anybody can open up a Roth. And there are positives to opening up your Roth in certain brokerages or financial institutions. They will match your contribution, similar to depending upon government and company employees. They will match your contribution. All right. Oh man, the Roth match last year was like $9, bro. Woo-wee. Uh, I'll be getting sidetracked. I'm sorry, y'all. Okay, but to the point. All right. So, let me see if I can pull this up. And I had did a public post, saying over the time that I've been trading, positive profit wise. So like how over the time that I've been trading, I probably put in maybe my win ratio is 37. I'm 62. So if you round it, it's 40, 60. So my goal is the reverse. Win ratio, I would rather I'm trying to double my win ratio from last year, which is basically instead of 40, 60, 60, 40. So that means I win 60% of my trades versus losing 40% of my trades. Now, I want you to rearrange your thought process. I'm not talking about $100 win on each trade, all that's not no money. Bro, if 60% of my trades are winners, and let's say I put $50,000 in the market, that means I lost 50,000 and I made 100,000 off the 50, right? As an example, right? If I come out to be, oh, you got some money. No, look, I'm saying it as an example. But far as win rate ratio, and yeah, I did. It was a pretty recent post, so let me see. No, that's not it. That's not it. Uh, I feel like this is it. That ain't it. I know I posted it. Yeah, here it is. So, From my rent ratio, I made over $7,000 positive profit wise off my rent ratio, and majority of that is probably this year, if not this year and last year. So when I tell you, yes, I trade, I do not trade, I do not have a profit, I was just showing that to let you know, like, yes, you can do this. Who wouldn't want an extra $5,000 to $10,000 added to their annual salary, which is the down payment for a home that you can use as an example. But also, this could be my max I can fund based on that, based on the win ratio I have right now, not even improving as a trader. The win ratio I have right now means I could fund my fully Roth by the end of this year, which is a side goal. It's not the main goal. But it dawned on me because one of my mentees had asked, hey, which one is more beneficial? Which one is tax related? And for them, I always told them, I said, depending on you have to be aware of who you're talking to. Not every financial person has all the answers that you're looking for in each financial instrument. What do I mean when I said it? How can I simply say that? A person who only plays craps, who only shoot dice, they don't know the ins and out of a roulette. Yes, they both gamble. They both understand their profit wise and what they will lose playing their game, but they don't know each other's game. So when it comes to when our mentees have posed this question about like, hey, what is the tax benefits, pros and cons of these two things? The Roth is separate from your high yield savings account. The high yield savings account is a savings account. That's all it is. As a savings account that has leverage in the market and bonds, which is why you get a uh, increasement in percentage, right? So like my high yield savings account is like 4% APO, so I get 4% on top of my money for holding it in this savings account and helping the financial institution who is also lending money out to X, Y, and Z, right? But that's the benefit of saying, hey, you keep your money with me, I will give you XYZ percentage growth, which is why it's always at this point, unless you just are doing it to handle business, I'm going to tell you to open up a high yield savings account. But I would tell you do both. Open up a high yield savings account. That way your money grows while you're sitting there. And that could be like the high yield savings account could be used in the aspect of monthly or yearly expenses, and your Roth is for your future. The contributions you make to your Roth is for your future because your Roth is selected. Like my Roth, I invested the very first thing I put in there was VTI. So I learned from the best, which is Vanguard, and I said I want to own the American Stock Exchange. So I bought and put contributions toward VTI, which is pretty much the entire stock exchange. And then I went, so I'll probably go tech, VTI, and maybe VOO, but VOO is tech concentrated, which is like, well, why have you already got VTI? Why don't you just do VTI? I personally like VOO because of who they have in their index, which is I think Tesla. I might do Mag 10. I really, really want to do Mag 10. Like there's a few trades, even just as investments, bro. You did a leap on that when Mag 10 first came out. My boy. Um, but yes, the overall benefits though. So I'm getting carried away. But the younger generation becomes more interested because I definitely want to put this on your ear. The young generation becomes more interested in investing and trading, but many of them are really only ask about the short term profits versus long term wealth. One of the most powerful tools that are available to you as a person who's Gen Z versus who's watching this show, bro, Roths are available to you. Um, Having custodial accounts if you're under 18 is available to you. But truly, like I know, like one of my mentees that told me that they do pretty well having this part time apprenticeship, internship, or job, right? And the moment he told me what he make, and I actually want the next generation to be more comfortable to talk about money, not in the aspect of bragging, but who's in your circle when you speak about money will expeditiously grow your wealth and grow your income. I'm not saying talk about money with your homies on the block because they don't know about the market per se. Unless there's conversations y'all having. But I'm talking about if you ain't having these conversations, there's no point in talking to them in that aspect about your money. Because people can only see what they see with their money. They only see they $60,000 salary. They can't see the millionaire that they could be if they aren't imagining it. They are where they are, and sometimes you gotta leave them where they are. And with that being said, um, but the benefits of it, like the investments to growth for tax free over time, unlike brokerage accounts, qualified withdrawals for the Roth IRA and retirements are not taxed. It makes one of the strongest well-bedded accounts for long-term investors. Meanwhile, high-yield savings accounts may become more attractive because of their raising interest rates, but now allowing savers to earn for significant more interest compound than traditional savings accounts. That's why I said, if you do a regular savings account, I can see you doing that for your day-to-day, monthly to monthly. Put this to the side. Maybe I'm doing a short-term goal project, what I'm saving for. But the high yield and the Roth, huh, we wealth building over here. I ain't calling myself a wealthy sibling for nothing. Like, what we talking about? I ain't speaking for none of the other wealthy siblings for nothing. Like, we talking for the next 5-10 years, bro. Like, I'm trying to be done and only economically and empowering and educating my community in the next like 5 years. Like that's what I'm on. Which is for the summer. I'm really gonna get into options for y'all. But yes, so I'll give you the textbook definition before we transition. A Roth is an individual retirement. So just because I want you to learn also while you watch the show or listen to the show. Shout out to iHeart, shout out to Amazon, shout out to Apple. A Roth IRA is an individual retirement account funded with a after tax dollar where qualified withdrawals in retirement are tax free. That's what they mean. So when you get to retirement age, if you withdraw the money, it's tax free. A high yield savings account is a savings account that pays significantly higher interest rates than traditional savings account while keeping funds liquid at low risk. That means you earn more money with this savings account versus traditionals. Now, one question I would pose to you is saving enough anymore? No, not in the economy we in, not in the direction we going as a world. Saving is not enough anymore. It really wasn't 5 years ago, but if I'm gonna be frank, majority of us, and I'm including me, missed the wealthy transformation, and that was only for a few. And it may or may not come back around, but that doesn't mean that you can't become a trader. You can't become an investor today. You can do that today, but how you transform your life and become a wealthy sibling, wealthy relative, and change your family money story, you got to put time into being a successful investor, a successful trader. And it's easy to become a successful investor versus a successful trader. What do I mean? If I just invest in companies like Google, Microsoft, NVIDIA, VOO, maybe waste management on the back end, I'm cool over the next 10 years. And I just consistently did that with my annual salary or income. I would be substantial. I would more than likely, and I'll put money on it, that I would be more profitable in the long term than any trader that is trying to do this in the next year or two. unless you're just good, right? But that's just how I feel about it. Uh, but let's talk about this for the next generation. So, and I was surprised when I see this from the boardroom, the post from the boardroom. Boy, they said, uh, let me see if I can pull it up. I think I got it saved on my Instagram too. Let me see. But basically, they said, Gen Z prefers the oh, I don't gotta say. They said Gen Z basically prefers going out to the movies versus like streaming. Like they are still traditionals with like the theater dating atmosphere, the environment, bruh. Like they still with that. And I was like, what? So then that posed the question because my again, I told you my brother, shout out Papa Fredo, who's the co-host of our other podcast, which is Midwest Point of View. We will be coming out heavy this summer. Things don't stop, but he's a trader also. Uh and he's heavy on AMC, which has made me like, I'm gonna talk about this because is AMC a meme stock? And could Gen Z save AMC? Woo! Could AMC get back to like $20 with Gen Z? I don't know. No more power to 'em. For me, I would that this would be like for fun. Like this would be I made some profit. I'm gonna throw like a little leap at this, see what happens. Like, let's see. So let's see. I'm gonna throw this out here. So what is it right now? It's at like $1.50, literally. But not saying you can't make money off penny stock. You can make money off penny stocks. My brother been telling me about this other stock that he done made money off of on the back end, which I was like, yeah, that's what I'm saying. So if we go all the way um to what is it? Oh, I could do that. But let's say by 2028, Apple gets above, I mean not Apple, AMC gets above $2. It's $120 for this leap, bro. It's all the way out to 2028 too. So Gen Z, if you do it and get this to $5, I love you. I would love you, but each his own. But why do I say could they save AMC? Gen Z love the movies, right? They still love movies, right? They're running into their era of dating and getting out into the world, and the young actors of the world who are part of the entertainment, and then social media movie hypes, and there is AMC a meme stock at this point. It's considered for me in my area. It's considered a meme stock, but it's culturally branded, bro. Like I go to AMC for a movie, hands down. Took my mom on Mother's Day. We went to see Mortal Kombat together at the AMC. And I choose AMC over any other common theater because of the movie experience. I like to be comfortable when I watch my movies, bro. Like I ain't unless I really, really I really want to go see the movie. But other than that, I'm still gonna go to an AMC, bro. I'm gonna lean back, enjoy the moment. Um, I'm a movie head. That's a part of like my peace time. So in regards of like the cultural experience and me loving the movie theater still, which is why I stand on the side of like I don't think movie theaters will go anywhere. I believe in that, but I don't know if the stock will reflect it at 300. I don't know. I think the world's changed a little bit too much, especially with the streaming aspect and people like Netflix, people like Amazon. Like they went so hard. Like Amazon has Prime movies, and not like I know they have Amazon Prime, but when I use the term Prime, I mean like they have high quality, high level movies. Denzel and all those top tier actors in their movies that they are owning outright. And at this point, it's like, what are we doing? But Amazon became one of the biggest meme stocks. And I want to say something, which is why I chose to become a versatile trader and investor. Because when I look at 2021, it always and mainly just depended upon where you pick the direction of the stock to go. If you watched it and it was on a downtrend and you put a put on like just for fun, you made a lot of money, bro. And a put is the down direction of the trend. So that means if the stock is going down, we're going to, as an options trader, you're going to put a put. I don't mean to air quote that, but as an options trader, you're going to put a put um, for you're saying that the contract or the direction of the stock will go down. And you're going to put a call for the direction of the stock if you think it's going to go up. I just want to say that. But yeah, man, but it was spotlighted during that pandemic era, trading a booming. So the reason why I say meme stocks is we treat AMC like GameStop, bro. I ain't even gonna hold you. Like you had the fanatics, but like if you ask around like the trading world, the investor world, bro, we gonna treat AMC just like GameStop. And if you get lucky, you get lucky, bro. More power to you. Most of us who make money, we never phase on how you make money. But if you become the one who gets wealthy and change your family's money story, like we tend to do here on the show, more power to you, bro. I ain't gonna be mad at you. I ain't gonna hate. Go get yours. But I'm just, that just again, we fundamentals and technicals over here. But is they say that now Gen Z has grown interest in the experience, but that's just y'all growing up. Fandom culture, blockbuster releases, the event style, movie audience, and creating new discussions around whether movie theaters are still long term value. Personally, as experience, I believe that, but like, will the younger generation drive a new wave of theater culture? I don't know. I can't see it. Um, but will it be a different economical experience? Of course. Streaming versus theaters will probably end up winning. Social media driven though, consumer behavior will be different. And then retail investors emotionally attached to these brands. We are. You the household name. Um, but here's what I will say. Sometimes stocks stop trading like businesses and they start trading like culture. So what does that mean? How many people are really going back? Like there isn't a heavy wave of people going to the theaters, even when the Michael Jackson release. That means that there was increased seats more than ever. But I went to the theater to see it. It wasn't packed out. Like the gross revenue means that they made more money than any other movie during this time frame, cycle, quarter. But the physical theater was not packed out. There were some empty seats. I just want to make that clear, which is why we be like, nah, bruh. Um, but my final takeaways for this episode, man. Markets are driven by expectations. Trading and investing are two different mindsets. I stick to that wholeheartedly. Trading and investing are two different mindsets. Long-term wealth to me always beats the emotional chase, the hype of day trading, and yada, 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 yada. I don't make $300 a day. I have to, bro. You're not phasing me personally. But I don't want my youngins, my mentees to be caught up in the hype versus having the money that they really need to make generational wealth. Because they start like my youngest mentees, it's like 10 and 13 talking about financial stability. Sir, you barely can get a job, but they talk about financial stability. So what is that telling you? Um, so but with all that, man, make sure you go grab my book if this is your first time. And I meant to say this at the beginning, but I'm gonna say this twice. So make sure you go grab my book, A Trade I Made, if you want to start understanding that you can change and trade one financial circumstances for a different outcome, for wealth and not for poverty. That you can learn how to man, how do I properly finance my first car before I go off to college, right? Like there's aspects of this. How can I be start and build a sustainable credit portfolio, credit score. So by the time that I'm 21 to 25, I can go almost get any apartment I want and be substantial while I go chase my dream career at Microsoft, at Google, at wherever. Um, make sure you go get that. And you're gonna see this again in the beginning. But man, like, share, subscribe, and join the Wealthy Sibling family, man. We appreciate y'all. Again, shout out to iHeart, shout out to Amazon, shout out to Apple. Appreciate y'all.